As you can see here, I have a trade that is running in deep profit. This is a deposit. This is a live deposit of $99 or $100. Okay, so and the only profit we made initially was just $19. Some of the trades we took were in loss, and just few. Okay, so but currently, if you look at this chart now, you see that we are running in 306 pips in profit. If you look at this trade, the first trade we entered, the first entry we had here was a sniper entry. Okay, it was a sniper entry. Okay, and the market started selling. Then this gap you see right here is the end of day. That this new candle right here is a new trading session. Let me switch to the daily time frame. You see what I'm talking about? Okay, so that gap is showing you that we have not entered. This gap you see here is trying to indicate that we've entered Asian session. Okay, simply means that we've entered Asian session. So basically this strategy that I'm going to show you in this video is just a scalping strategy. Okay, a scalping strategy that you can use to just scalp. Okay, we're going to use this strategy to only scalp the market. Okay, and now you'll be wondering why did I open on that position here? Why did I put another position here? If you even look at this chart, if you look at the trade now, trade history, you find out that my first three trades is those trades. This first three trade you see here is the first trade I entered. Okay, then these other ones you see here, these subsequent ones you see here, are the trade that I entered in this zone right here. Okay, so but this initial trade is the one that took this account from $118. Okay, took this account from $118 to where it is currently. Okay, so now in my previous video someone asked me that why do I usually open multiple positions? Why don't I just open one position with maybe 0.30 lot size or 0.50 lot size? Why do I choose to open multiple positions with maybe 0.1 or 0.5? That's what someone asked me in my previous video. But one thing I want you guys to understand is that sometimes you cannot just predict exactly where the market is going to reverse from. So you need to have something like a leverage. These three trades I have here is the leverage for these other ones that is here. Okay, it's because these three trades are in profit and my account has already moved in profit. I'm no more using my initial equity. I'm no more risking my initial deposits. That's why I could be able to open other multiple positions. And also I already know that I am holding the trade, and the trade is going in my direction. So when you are trading and the trade is actually going in your direction, you can hold trade for a longer period of time. So this simple strategy, if you look at this zone here, you see where there was switch of structure. Okay, the market switched here and the market is now going upward. Okay, and there was a bounce right here, and we see how very accurate our entry is before the market started going upwards. If you look at the daily time frame in this particular chart, if you look at the daily time frame, you're going to find that the market is already bullish. So guys, tell me why this market is bullish and I'll be doing something else. This market is bullish, right? So why am I trying to go against the trend? It's not just right for me to stick to the trend. So you stick to the trend, you already figure that the market is bullish, you wait for a reversal point, wait for a pullback, and you look for trading opportunities, and you join the trend. You don't need to go against the trend. This indicator that we're using in this video, I've actually showed you this indicator in my last video. Okay, but I'm going to be adding the link to that video here. Guys, we're in deep profit, guys. Can you see what's happening here? Very mad, very mad. We currently have only one position running in this account, and we've closed most of the positions. In case you don't know how to set up a chart, let me just quickly show you how to set up a chart. You go to your F icon. We are basically using these three indicators. So there's the relative strength index, okay, and there's three other moving averages that we're going to be using. Okay, so for your indicator, you have to use, first of all, click on the main chart, okay, to add this relative strength index. That's what you do. So when you click on your main chart, you look for a relative strength index. So we have your relative strength index. So our period is 14. apply to close. The level we have level 30, level 70. Okay. We can just edit it. Use level, add 3 more levels. Add level 50. Add level 100. Okay, and let's add level 10. Let's add level 10. So these are basically the levels you're going to be using. The next indicator you're going to be using is your moving average. So your moving average period is 5. Okay, I've done this in the previous video. So period is 5, shift is 0. So method is simple, apply to close. Then once you have all of this figured out, you click on save. Okay, so for the second moving average, this is going to be our parameters. Okay, the period is 25, shift is 0, method is simple, apply to close. Your level, no levels. Okay, and once your color is color orange, or let's use brown. Let's use brown. Let's use a darker color. Okay, so click on save. Then your third moving average is going to be this moving average with the period of 10, shift is 0, simple is method is simple, apply to close, level none. Okay, time frame, all time frame, use color green and use 1 pixel. Once you have all of that figured out, you click on save. So once you've inputted all those indicators, you're going to have the relative strength index, moving average, another moving average, another moving average, and make sure everything is added to indicator window 1. Okay, make sure everything is added to indicator window 1. Alright, so once you have that figured out, you're going to have a chart that looks exactly like this. And now with this particular strategy, you're going to use only the 1 minute time frame, and you're going to look for when we have ranging markets. And when do you think we have ranging markets? Usually have ranging market during the Asian session. Okay, so I don't know where you're watching this video from. I don't know the country you're watching this video from, but during the Asian session, we're going to have ranging markets. So that's when we are looking at leveraging or taking trading opportunities during the Asian session. Guys, can you see we are in deep profit? This account was actually a simple deposit of 90. Can you see $99 is the deposit? Okay, and we're already in $300 profit. So guys, can you see that we actually had some losing trade? Okay, so it's quite normal for you to have losing trades. So do not think that having losing trade in the market is wrong, but make sure that your wins are above your losses. Alright, make sure your wins are above your losses. So this relative index you have here in the charts, whenever the market is below this level 0, that's when you'll be looking at taking buying opportunities. Whenever the market's here, we're looking out for selling opportunities.